What's up, Amelia from Revenge Rewired here. Today's story, absolutely wild. Hit subscribe so you never miss one. I met Rebecca at a charity fundraiser 12 years ago. She worked as a development director for a small nonprofit, and I was a mid-level marketing manager at a tech company. We bonded over our shared middle-class backgrounds, or what I thought were our shared backgrounds. She often talked about growing up in a modest suburban home, working her way through state college, building her career from scratch. We married 2 years later. The cracks started showing around year 10. Rebecca became secretive about money, defensive when I asked about our joint finances. She insisted on keeping separate accounts for independence, which I'd initially supported. But when I suggested we consolidate to save for a down payment on a larger home, she became hostile. Then I discovered the affair. Not through dramatic confrontation, but through a credit card statement that arrived at our house instead of her office. Charges at expensive hotels, restaurants I'd never been to. A jewelry purchase for $3,400. I'd never received any jewelry. When I asked her about it calmly, she didn't deny it. "I'm not happy," she said simply. "I haven't been for years. I want a divorce." The woman I thought I knew disappeared overnight. 3 months later, we sat in a conference room for our first mediation session. Rebecca arrived with Patricia Chen, an attorney known for aggressive divorce tactics. Patricia had a reputation in our city. She won big, and she won often. I'd hired a competent attorney, Mark Sullivan, who specialized in family law but had a gentler approach. He believed in fair settlements and avoiding court when possible. "Let's make this simple," Patricia began, spreading documents across the table. "We've prepared a complete financial disclosure. As you can see, my client earns $67,000 annually from her nonprofit position. She has approximately $23,000 in her personal checking and savings accounts. Her 401k has $89,000. She owns a 2019 Honda Accord worth approximately $12,000. That's the extent of her separate property." She slid another document toward us. "The marital estate consists of the house, valued at $425,000, with a remaining mortgage of $180,000, giving us $245,000 in equity." Patricia leaned back confidently. "My client is being generous. Despite your higher income throughout the marriage, she's willing to split everything 50-50. That means your client keeps his full 401k and pays my client $138,000 for her half of the house equity and joint savings. Clean, simple, done." Rebecca sat beside her attorney, looking modest and reasonable. She wore a simple dress, minimal jewelry, her hair pulled back. She looked like exactly what she claimed to be, a nonprofit worker of modest means who just wanted a fair split. Mark reviewed the documents carefully. "This seems straightforward, but I'll need time to review with my client." "Of course," Patricia said smoothly, "but let's be clear about something." Her voice hardened. "My client inherited nothing from her family. Her parents are still alive and living on Social Security. She built everything she has through her own work. If your client thinks he's going to find hidden assets or some secret inheritance, he's wasting everyone's time and money." She slid a final paper across the tabula formal settlement offer. "Take $120,000 and move on," she said firmly. "We're rounding down to make this easy. My client wants this finished quickly and amicably. But if we have to go to court, if we have to drag this out, the costs will eat up any difference. Your client will spend $40,000 in legal fees to fight over what might be another $20,000. It's not rational." Rebecca finally spoke, her voice soft and hurt. "I just want this to be fair, David. I don't want to fight. I never wanted any of this." I looked at her, this woman I'd shared a bed with for a decade, who I'd thought I knew completely. She met my eyes with what looked like genuine sadness. I smiled carefully. "I appreciate the offer. Let me review everything with Mark, and we'll get back to you within a week." Patricia looked satisfied. "That's reasonable. But don't take too long. My client is being generous now, but that generosity has limits." As we left the building, Mark turned to me. "It's actually a fair offer, David. Unless you have reason to believe she's hiding something, this might be the best resolution." "Give me that week," I said. "I need to check on something." What I did, you tell Marquette, I could tell him yet because I needed to be absolutely certain, was that I'd already been investigating Rebecca for 3 months. It started the day after Rebecca asked for the divorce. I was angry, hurt, and looking through old files in our home office for marriage counselor recommendations. That's when I found the envelope. It was tucked into a folder labeled Rebecca Personal Documents that I'd never had reason to open before. Inside was a single piece of paper, a statement from Merrill Lynch dated 3 years earlier. Before Rebecca had become so secretive about finances, the statement showed an account in Rebecca's name with a balance of $847,000. I stared at that number for 10 minutes. Rebecca, who claimed she'd built everything from scratch, who drove a Honda and worked at a nonprofit, had nearly $1 million in an investment account I knew nothing about. The statement was 3 years old. Where had that money come from? Where was it now? And why had she never mentioned it? I photographed the statement and put everything back exactly as I'd found it. Then I did what I should have done earlier. I started paying attention. Over the next week, I quietly gathered every financial document I could find. Old tax returns, bank statements, investment records. I created a timeline of Rebecca's financial life, as much as I could piece together. That's when I noticed the pattern in our joint tax returns. For the first 8 years of our marriage, our returns were straightforward. My income, her income, standard deductions, modest investment income from our joint accounts. Normal. But starting 5 years ago, there was a line item that appeared every year. Trust income. See Schedule E. The amounts varied: $47,000 one year, $83,000 another, $126,000 in the most recent return. I'd signed these returns. I'd sat with our accountant, reviewed the numbers, signed my name. But I'd never really looked at the details. Our accountant prepared everything. We owed some taxes, or got a small refund, and we moved on with our lives. Now I looked closely at Schedule E. The trust income was attributed to Bennett Family Trust, Rebecca Adams, beneficiary. Rebecca's maiden name was Adams. I'd met her parents once, briefly, at our wedding. They seemed like normal, middle-class people. Her father had worked in insurance. Her mother was a retired teacher. They lived in a modest ranch house in Ohio. There was no family wealth, no inheritance, no trust fund, except apparently there was. I needed professional help. I found Jennifer Martinez through a colleague whose own divorce had involved hidden assets. Jennifer was a forensic accountant who specialized in uncovering concealed wealth in divorce cases. Our first meeting was in her office downtown, away from my neighborhood where someone might see me and mention it to Rebecca. I need complete discretion, I told her, sliding the documents across her desk. My wife doesn't know I'm doing this. Jennifer, a woman in her 50s with sharp eyes and an old business demeanor, reviewed the materials carefully. Trust income on joint tax returns that you never received benefit from. An old investment statement showing significant assets. A wife claiming poverty in divorce mediation. She looked up. This is more common than you'd think. Can you find where the money is? Probably. If it exists and it's marital property, there will be a trail. But I need you to understand something up front. She leaned forward. This investigation will cost between $15,000 and $25,000 depending on complexity. You'll pay that whether I find anything or not. And if I do find hidden assets, your wife's attorney will fight every step of the way. Are you prepared for that? I thought about Rebecca's confident smile in mediation, Patricia's dismissive tone, the settlement offer that seemed designed to make me go away quickly. Yes, I said, I'm prepared. Then, let's start with what we know, Jennifer said, opening her laptop. First, these tax returns. You filed jointly, which means you're both responsible for the accuracy of everything on them. That trust income, Rebecca received it, but where did it go? It's not in any account you know about. She pulled up the most recent return. Last year, the trust distributed $126,000 to Rebecca. I don't know exactly, and here's what's interesting. She pointed to another section. The trust itself is called the Bennett Family Trust, not Adams Family Trust. Bennett was her mother's maiden name, wasn't it? I had to think. Yes, I think so. Her mother's name was Eleanor Bennett before she married, so this trust was likely established by Rebecca's maternal grandparents or other Bennett family members. It's been distributing income to Rebecca for years, but she's characterized herself in mediation as someone who inherited nothing. Technically, a trust distribution isn't inheritance, it's income, but it's a deceptive distinction. Jennifer made notes. Here's what I'm going to do. First, I'll trace these tax returns back as far as I can access them. Second, I'll search public records for any trusts associated with the Bennett family name. Third, I'll look for any property, investments, or accounts that might be held in trust names or family member names. Fourth, I'll analyze your joint bank account records to see if I can track where money went. How long will this take? Give me 8 weeks. Maybe sooner if the trails are clear. I wrote her a check for $10,000 as a retainer, using money from an old savings account Rebecca didn't know about leftover from before we married. One more thing, Jennifer said as I stood to leave. Don't change your behavior. Don't confront your wife. Don't let on that you're investigating. The moment she knows, she can move money, restructure trusts, create barriers. We need her to feel completely safe. So I went home and played the role of the reasonable husband, considering a fair settlement offer. Jennifer called me 2 weeks later. We need to meet. I've found something significant. In her office, she had documents spread across an entire conference table. David, your wife isn't just hiding money. She's been systematically concealing a multi-million-dollar trust fund for your entire marriage. She pointed to the first set of documents. The Bennett Family Trust was established in 1987 by Rebecca's maternal grandfather, Harold Bennett. He was a successful commercial real estate developer in Ohio when he died in 2003. The trust was worth approximately $8.2 million. My stomach dropped. $8 million. The trust terms specify that income and principal can be distributed to Bennett family descendants. Rebecca's mother, Eleanor, was a beneficiary but never took distributions. She had income from her teaching career and didn't need it. When Eleanor turned 70, she assigned her beneficial interest to her 2 daughters, Rebecca and her sister, Michelle. Jennifer pulled up another document. Here's where it gets interesting. The trust was restructured 5 years ago. Instead of being one trust, it was split into 2 separate trusts. Trust A in Rebecca's name, and Trust B in Michelle's name. Each trust received approximately $4.1 million in assets. But the tax returns show trust income, not millions in principal. Correct, because the assets remain in trust. They're not technically Rebecca's personal property. They're trust property, where she's the beneficiary. The trust owns investments, stocks, bonds, real estate, and that's what generates the annual income you see on the tax returns. But here's the critical point. In your state, a beneficiary's interest in a trust can be considered marital property if it was acquired during the marriage or if marital funds enhanced its value. My head was spinning. So Rebecca has a $4 million trust fund, and she's offering me $120,000 to go away. Not exactly. She had a $4.1 million trust 5 years ago. Now, based on the most recent trust tax returns I accessed through public records, that trust has grown to $5.8 million. I sat down heavily. $5.8 million, Jennifer continued, her voice steady and professional. The trust files tax returns as a grantor trust, which means Rebecca reports all the income personally. That's what you've been seeing on your joint returns. But the trust principal, the $5.8 million, doesn't appear on your personal tax returns because it's not distributed. It just sits there, growing. How did you find this? Trust tax returns are sometimes accessible through public records, depending on the state and whether the trust owns real property. The Bennett Family Trust owns 3 commercial properties in Ohio, which meant I could trace the trust through property records. Once I had the trust's tax ID number, I could request the trust tax returns. They're signed by Rebecca as trustee and beneficiary. She showed me a stack of documents. Here's 5 years of trust tax returns, each one signed by Rebecca. Each one showing assets growing from $4.1 million to $5.8 million. And here, the critical evidence. These signatures match the signatures on your joint personal tax returns. The implications hit me. She knew. She signed documents every year acknowledging this trust, and she never told me. Not only that, Jennifer said, but she's been actively concealing it. Look at your joint bank records. She pulled up account statements on her laptop, her sister's account. Yes, Rebecca has signature authority on the account, but it's titled in Michelle's name. The money sits there briefly, then gets transferred back into the trust for reinvestment. It's a shell game. The income gets reported on your joint taxes, so the IRS is satisfied, but it immediately goes back into the trust. You never see it, never benefit from it. And based on your lifestyle, never even knew it existed. Jennifer's expression was serious. David, this is textbook financial fraud in a divorce context. Your wife has been lying under oath about her assets. Her attorney has been making representations to you based on false financial disclosures. This is serious. What do I do? First, I'm going to prepare a comprehensive forensic report documenting everything: the trust's history, the current value, Rebecca's signatures on trust documents, the movement of money through Michelle's account, and the discrepancy between what she's disclosed in mediation versus reality. Second, you need to tell your attorney immediately. Third, we're going to need to depose both Rebecca and Michelle under oath. Will this hold up in court? Jennifer smiled grimly. David, she signed joint tax returns with you showing trust income. She signed trust tax returns as trustee showing $5.8 million in assets. Her own signatures will convict her. There's no wiggle room here. I met with Mark Sullivan the next day and handed him Jennifer's preliminary report. He read through it, his expression growing increasingly serious. This is substantial, he said finally. If this is accurate, and it appears to be based on these signed tax returns, your wife has committed perjury in her financial disclosures. She swore under oath that she inherited nothing and has minimal separate property. What happens now? We file a motion to compel complete financial disclosure and request a court hearing. We'll subpoena the trust documents, Michelle's bank records, and anything else we need. And David, Mark looked at me directly. This changes everything. We're not talking about a $120,000 settlement anymore. We're talking about your equitable share of a $5.8 million marital asset. The trust is marital property. The trust itself existed before your marriage, so normally it would be separate property. But here's the key: the trust was restructured during your marriage. Rebecca had the option to take distributions during your marriage but chose not to, letting the money grow instead. In this state, a spouse's beneficial interest in a trust can be considered marital property subject to equitable division, especially when the spouse had control over distributions and chose to accumulate wealth rather than use it for marital expenses. Mark started drafting the motion. We'll be asking the court for several things: full disclosure of the trust, an accounting of all distributions, access to Michelle's bank records to trace the money, and potentially a ruling that Rebecca must distribute sufficient trust funds to satisfy your equitable share of the marital estate. How much could that be? Conservatively, if the court determines that half the trust's value is marital property, and there's good precedent for that given the restructuring, during marriage we're talking about $2.9 million. Even if the court is more conservative and assigns only 30% as marital, that's still $1.74 million. The motion was filed 3 days later. Patricia Chen called Mark within an hour, her voice tight with anger. What is this fishing expedition? She demanded. Your client is making wild accusations about hidden trusts based on some questionable forensic analysis. The analysis is based on tax returns your client signed, Mark replied calmly. Joint tax returns filed with my client and trust tax returns filed with the IRS. We have Rebecca's signatures on documents showing a $5.8 million trust. Your client's financial disclosure in mediation was false. There was a long pause. We'll respond to the motion, but I'm advising you that this aggressive approach is going to cost your client significantly in legal fees. We'll let the judge decide, Mark said. The hearing was scheduled for 3 weeks later. The courtroom was smaller than I expected, with Judge Linda Harrison presiding. She was a veteran family court judge, known for having little patience for deception or games. Rebecca sat at the opposing counsel table with Patricia, looking nervous for the first time since this process began. She wore a conservative suit, her hands folded on the table. She wouldn't look at me. Judge Harrison reviewed the filings. Ms. Chen, your client submitted a financial disclosure in mediation stating she has approximately $124,000 in separate property and no family inheritance or trust funds. Mr. Sullivan has presented evidence suggesting your client is the beneficiary of a trust currently valued at $5.8 million. These positions seem irreconcilable. Patricia stood. Your Honor, the trust in question is separate property established long before the marriage. My client has no control over the principal and receives only modest distributions as income, which were properly reported on joint tax returns. The trust itself is not a marital asset, yet your client testified she inherited nothing in her sworn financial disclosure, Judge Harrison said, reading from the document. A trust beneficiary interest is certainly something, Ms. Chen. The question asked about inherited assets. Your Honor, the trust principal hasn't been inherited, remains in trust. Judge Harrison looked unimpressed. Mr. Sullivan, What evidence do you have? Mark stood and nodded to Jennifer, who was seated behind our table. Your Honor, we've prepared a comprehensive forensic analysis. With the court's permission, Jennifer Martinez, our forensic accountant, will present the findings. Jennifer approached the stand and was sworn in. She presented her credentials: 20 years of forensic accounting experience, certified in financial forensics, testified in over 200 divorce cases. Ms. Martinez, Mark began. What did your investigation reveal about the Bennett Family Trust? Jennifer opened her report. The Bennett Family Trust was restructured in 2020 during the parties' marriage, splitting into two separate trusts. Trust A, with Rebecca Adams as sole beneficiary and trustee, received assets valued at $4.1 million at that time. Based on trust tax returns filed with the IRS, that trust has grown to $5.8 million currently. How did you verify this? Through multiple sources. First, joint tax returns filed by both parties showing trust income ranging from $47,000 to $126,000 annually over 5 years. Second, trust tax returns filed with the IRS by Rebecca Adams as trustee, showing the trust's assets and income. Third, property records showing the trust owns commercial real estate in Ohio. Fourth, bank records showing trust income distributions being deposited into an account in Michelle Adams' name, which Rebecca has signature authority over. Mark approached the bench with documents. Your Honor, I'm submitting Exhibits A through M, 5 years of joint tax returns signed by both parties, 5 years of trust tax returns signed by Rebecca Adams, bank statements showing the movement of trust distributions, and property records for trust-owned real estate. Judge Harrison reviewed the documents carefully. She looked at Rebecca's signatures on the joint returns, then at her signatures on the trust returns. They were identical. Ms. Adams, Judge Harrison said, you signed these trust tax returns as trustee. Rebecca stood slowly. Yes, Your Honor, and you signed these joint tax returns with your husband, showing trust income. Yes, but I can explain. Did you disclose the existence of this trust in your financial statement provided in mediation? Patricia tried to intervene. Your Honor, my client didn't believe the trust principle was relevant since it's separate property. I asked your client, Ms. Chen. Judge Harrison's voice was sharp. Ms. Adams, did you disclose this trust? Rebecca's voice was barely audible. No, Your Honor. Why not? I didn't think it was relevant. The money was never part of our marriage. We never used it for expenses. Jennifer spoke up from the witness stand. Judge Harrison nodded slowly. Go on. In this state, income earned during marriage is marital property. Mrs. Adams received $450,000 in trust income during the marriage. Rather than using it for marital purposes, she hid it by routing it through her sister's account and back into the trust. The trust grew from $4.1 million to $5.8 million during the marriage, a $1.7 million increase. That growth was funded partly by marital income that she concealed. Patricia stood again. Your Honor, the trust income was reported on joint tax returns. Mr. Adams knew about it. He signed the returns. Mark countered immediately. Your Honor, my client signed tax returns prepared by an accountant, as most people do. He had no reason to scrutinize every line item when his wife assured him their finances were transparent. Mrs. Adams had a duty to disclose the trust's existence and value during mediation. She did unjust fail to disclose. She actively concealed it by moving money through her sister's account. Judge Harrison, set the documents down. Here's what I see. Mrs. Adams, you signed a financial disclosure under oath stating you inherited nothing and have minimal assets. You're the beneficiary and trustee of a trust worth $5.8 million. You receive substantial income from that trust annually, which you've been hiding by routing through accounts in other people's names. Your own signatures on tax returns prove you knew exactly what you were doing. Rebecca's confident smile from mediation was gone. Her face had gone pale, her hands gripping the table. This court takes financial fraud very seriously. Judge Harrison continued. Ms. Chen, your client has committed perjury in her financial disclosures. I'm ordering the following. First, Mrs. Adams will provide complete financial accounting of the trust within 7 days, including all documents, statements, and records. Second, both Rebecca Adams and Michelle Adams will sit for depositions regarding the movement of trust funds. Third, I'm sanctioning Mrs. Adams. $15,000 payable to Mr. Adams for costs associated with uncovering this fraud. Patricia looked like she'd been slapped. Your Honor, We object to characterization of your objection is noted and overruled. Furthermore, I'm referring this matter to the District Attorney's Office for review of potential criminal charges related to perjury and tax fraud. If Mrs. Adams was reporting income to the IRS but hiding it from her spouse and this court, there may be additional issues to address. Rebecca made a small sound, almost a gasp. Judge Harrison wasn't finished. As for the trust itself, I'm preliminarily finding that Mrs. Adams' beneficial interest in the trust is subject to equitable distribution. The trust was restructured during the marriage, giving Mrs. Adams sole control and beneficiary status. She chose to accumulate wealth in the trust rather than use it for marital purposes. That was her choice, but it doesn't insulate those assets from equitable distribution, Your Honor. Patricia tried again, her voice strained. We request time too. You'll have time to respond in full briefing, but based on the evidence presented today, evidence consisting of your client's own signed documents, this court is inclined to award Mr. Adams a substantial share of the trust's value. We'll reconvene in 30 days for a full hearing on asset division. Judge Harrison looked directly at Rebecca. Mrs. Adams, I strongly suggest you consult with your attorney about amending your settlement offer. The $120,000 you offered in mediation isn't going to cut it anymore. This court will ensure equitable distribution of all marital assets, including trust assets your client has been hiding. She banged her gavel. Court is adjourned. In the hallway outside the courtroom, Patricia pulled Rebecca aside for an urgent whispered conversation. I saw Rebecca's hands shaking, her face still drained of color. Mark put a hand on my shoulder. That went extremely well. Judge Harrison is clearly furious about the deception. We're in a very strong position now. What happens next? They'll make a new settlement offer, a real one this time. If they don't, we go to trial. And based on today, I think we'll get 40 to 50% of the trust's value. That's $2.30 to $2.9 million. 3 days later, Patricia called with a settlement proposal. Rebecca would distribute $2.4 million from the trust to me, representing just over 40% of its value. In exchange, I would waive any claim to her future trust income and accept the settlement as final. With Mark's advice, I countered $2.6 million. Plus, she pays all my legal fees and Jennifer's forensic accounting bill, totaling about $48,000. They accepted within an hour. The final hearing was procedural. Judge Harrison reviewed the settlement terms, confirmed I understood and agreed, and asked Rebecca one final question. Mrs. Adams, do you understand that you committed perjury in your initial financial disclosures? Rebecca, subdued and quiet, nodded. Yes, Your Honor. The only reason you're not facing criminal charges is because you've agreed to this settlement and made full financial disclosure. If you ever misrepresent your finances to this court or any other court again, I will personally ensure you face prosecution. Do you understand? Yes, Your Honor. Judge Harrison signed the order. The divorce was final. The trust distribution took 6 weeks to process. When the wire transfer hit my account, $2,648,000 after all fees and costs. I stared at the number on my phone for a long time. Rebecca's sister Michelle was apparently furious about the whole situation. According to mutual friends, she'd been complicit in hiding the money, and now her sister had to give up nearly half the trust. Their relationship was reportedly strained. Patricia Chen never spoke to me again. But I heard through legal circles that she'd been sanctioned by the state bar for her role in the misleading financial disclosures. She claimed she'd relied on her client's representations, but the bar found she should have done more due diligence. As for Rebecca, I heard she kept her nonprofit job for a few months before quietly resigning. The last I knew, she'd moved to Ohio to be closer to her parents and, presumably, to manage what remained of her trust fund away from the city where her fraud had become known in legal circles. I thought about that mediation session often. Patricia sliding the settlement offer across the table, so confident. Rebecca sitting there looking modest and reasonable, playing the role of the humble nonprofit worker. The $120,000 offer designed to make me go away. If I hadn't found that old Merrill Lynch statement. If I hadn't noticed the trust income on our tax returns. If I hadn't hired Jennifer Martinez. I would have taken that settlement. I would have walked away with $120,000 while Rebecca kept $5.8 million hidden. Instead, I walked away with $2.6 million and the satisfaction of watching her confident smile disappear when Judge Harrison confronted her with her own signed tax returns. The money mattered, of course, but what mattered more was the principle. Rebecca had looked me in the eye for 12 years, sharing a bed and a life, while systematically hiding millions of dollars. She'd sworn under oath that she had nothing, counting on my ignorance to let her keep everything. The system worked. The forensic accountant found the trail. The judge saw through the deception. The evidence was irrefutable. Justice, I learned, isn't about revenge, it's about the truth coming to light, documented and undeniable, forcing people to face the consequences of their own signatures on their own lies. And sometimes, when you smile and say you'll think about it, what you're really thinking is, I already know the truth. And soon, everyone else will too.